Do you believe that in 2023 the price of Tesla stock may double? Tesla stock has had a difficult year, and many people are hoping that 2023 would be different. Even experts disagree on this. Some believe that Tesla stock will keep declining, while others assert that it will really double. Considering that we firmly believe that 2023 will be a difficult year for the EV market overall, you would not want to miss this information. We think Tesla's lead over the competition may grow. Jonas of Morgan Stanley stated in 2023, analysts expect Tesla earnings per share to grow cooler 40 to 5.66, with sales up 42% to $118.2 billion. Despite the rapid rate of expansion, analysts think that the period of triple-digit growth and the notion of limitless demand that supported Tesla stock for a long time may be coming to an end. Yet, Tesla continues to be the leading EV manufacturer in the US. According to data released in November by SP Global Mobility, 65% of the 525,000 registered electric cars (EVs) in the United States through the first 9 months of 2022 were Tesla automobiles. Production at the original Fremont factory has increased dramatically. For background, the Model 3 and Model Y, along with the high-end Model S sedan and Model X SUV, are all produced at the Fremont factory. According to Tesla, the Fremont factory is capable of producing up to 550,000 Model 3 and Model Y automobiles annually. Additionally, it is capable of producing up to 100,000 Model S and Model X automobiles. The proposed capacity of a more recent Austin location is 250,000 cars. As the facility approaches capacity, Tesla Austin is expected to boost profit margins by increasing the production of the Model Y. When that truck is available for purchase, which might happen in mid to late 2023, Austin will produce the Cybertruck. The frequently delayed truck isn't anticipated to contribute significantly to volume this year, though. It was reported by Bloomberg in late December that Tesla was also completing preparations to construct a car assembly plant in northeastern Mexico. Because of its electric vehicles, Tesla has made notable strides in the U.S. auto business. Nevertheless, Tesla's dominance in the U.S. is undeniable. The GM Bolt and Bolt UV are currently being produced in respectable quantities by conventional carmaker General Motors. However, these are sub-Tesla EVs in terms of features and price. In Tennessee, the Volkswagen ID.4 is now made. Several venerable automakers are also gradually making their way into the EV market. Interesting opponents to the Model Y are the Ford Mustang Mach-E, Hyundai Ioniq 5, and Kia EV6 crossovers. However, overall volume is still not that high. While the reasonably priced Fisker FSR Ocean SUV will hit the market by late 2023, Ford Mach-E production is scheduled to increase in 2023. General Motors wants to sell a number of electric vehicles EV using its new Ultium batteries. Additionally, Ford plans to increase the number of F-150 Lightning pickup trucks it produces to 150,000 annually by the fall of 2023. 13,258 F-150 Lightning vehicles were sold by the company through the end of November. The initial $39,974 price of the entry-level Lightning has increased by 40% to almost $56,000 due to multiple price increases. That illustrates the Lightning's appeal as well as its rarity and expensive battery requirements. The simple fact is that mass EV production may not begin until 2024 or later, particularly for automobiles that directly compete with Tesla. However, it is anticipated that the general race to attract American automakers would intensify. The U.S. auto industry as a whole should see growth in 2023 as used car prices, especially those of Tesla EVs, are beginning to decline due to supply chain issues and shortages of chips. Nonetheless, there is a strong expectation that Tesla sales will increase dramatically in the U.S. the next year. Experts predict that the Inflationary Reduction Act's new e-tax credits, which can total up to $7,500 per vehicle, will help Tesla in 2023. However, income and car price limitations may restrict the use of Tesla automobiles and customer eligibility. Eligible sedans are restricted by the EV subsidies to costs of $55,000 or less, while pickup trucks SUVs are capped at $80,000. To be eligible for IRA refunds, Tesla most certainly needs to permanently lower its prices in the US. However, it is important to note that the EV credit only applies to vehicles assembled in North America, noted Bernstein Sakanagi. This does not include imports like the EV6 and Ioniq 5. Many prospective Tesla buyers have postponed purchases or waiting until 2023 to take delivery due to the approaching EV credits. On December 21st, Tesla launched a $7,500 credit on Model 3 and Model Y deliveries made in the United States before the end of the year. From $3,750 at the start of the month, that is an increase. As a further incentive, the powerhouse of EVs is providing free supercharger miles. Conversely, analysts believe that even though Tesla had a dismal 2022, 2023 might not be any better. The top EV manufacturer experienced difficulties in 2022 on the stock market, and the pressure is still mounting. Elon Musk is preoccupied with Twitter, rivals are improving, and consumers are spending less on cars. Given this, a lot of people think that having a charismatic CEO has advantages and disadvantages. Elon Musk, the CEO of Tesla, is a well-known businessman, but people's opinions of him have significantly changed as a result of his recent decision-making abilities. Tesla shares have lost 62% of their value since Musk announced his acquisition of Twitter in mid-April 2022. A large portion of this fall occurred after Musk assumed leadership of the social network. The tech stock market meltdown that started in November 2021, coupled with years of poor performance and Musk's diversion with Twitter, ultimately paid out for those who had gambled against Tesla shares. The Wall Street Journal claims that such traders made $17 billion in profits in 2022. However, others argue that investors should see the wider picture and not just the difficulties Tesla is currently facing. It is no secret that in 2022, investors lost their minds due to soaring inflation, rising interest rates, and the possibility that the United States may enter a recession, which sent the stock market into bear territory. However, there's also a chance that a bull market will emerge in the new year as a result of declining inflation, which might force the Federal Reserve to abandon its aggressive attitude. Consequently, there's a chance that stocks may bottom out in 2023's first half and end the year strongly. Thus, during the coming months, astute investors have a chance to amass some strong companies that have the potential to soar higher. One such business that might profit in a bull market is Tesla. Although its shares have dropped 67% in the last year, analyst consensus projections indicate that they may rise sharply in the upcoming year. A consensus of 36 analysts has set a median price objective of $250 for Tesla stock. That is $121 more than the stock price of the company that makes electric vehicles, EVs. Furthermore, Tesla's street high pricing target of $436 may represent a 286% increase from the current market price. It is important to note that Tesla has been seeing incredible growth each quarter due to the strong demand for its vehicles, but with the wider sell-off in the financial market, CEO. The company's shares have been adversely affected by Elon Musk's acquisition of Twitter and worries that demand for Tesla vehicles is waning as a result of the macroeconomic recession. Investor confidence has been further damaged by the company's recent pricing reductions in China. Nevertheless, it is anticipated that Tesla will close 2022 with a staggering 77% increase in earnings to $4 per share and a 53% increase in revenue to $82.5 billion. It is anticipated that the business will continue to expand at an exceptional rate in 2023 and 2024. The 5-year estimate is likewise promising, with Tesla predicted to expand its profitability at a rate of around 35% each year throughout that time. There are two possible explanations for the company's phenomenal rise. Firstly, Tesla holds a significant position in the global electric vehicle industries. In Europe, the two most popular electric vehicles are the Tesla Model Y and the Model 3. With 2/3 of all EV sales occurring in China, the largest EV market in the world, Tesla holds an 8% market share there. In the first 9 months of 2022, Tesla was expected to have held 65% of the EV market in the United